Hello friends, it will be interesting for us to talk about the monetary policy action which has surprised the markets, that RBI has kept the repo rate intact and opted for a pause in interest rate hikes when the rest of the world is on rising the interest rates. So if we go into the dynamics of how the RBI has viewed this to come to this conclusion, I think as far as India is concerned, India is a unique economy with a lot of resilience, that it is poised to grow at 7% in FY23 and at 6.5% in the range of 6 to 6.8% as far as the government estimate is concerned for FY24. Though recently IMF has lowered its outlook on Indian economy to 5.9%, but still we have three fundamental strengths. First is we continue to grow at a very stable rate, and liquidity conditions are stable. And the third thing is the banks are very strong now, that the banking system is very strong now with asset quality improving, and the net NPAs are at 1.2%. That is a 10-year low as far as the quality of assets in the banking system is concerned. And the capital adequacy ratio is at about 16% as compared to 11.5%, that is the mandatory requirement. So banks are on a stronger footing. Now we have these unique dispensations, but the weaker points, if you consider, the inflation is yet to come to the targeted range of around 4%, though it is now March data has now come after the monetary policy review was done on 6th of April. Now the inflation has come down to 5.66%. That is a very good below the 6% mark. But for the last about 11 months, the inflation is beyond 6%, and more important is the core inflation, which is bothering the country, and food and fuel inflation is very uncertain now, with OPEC opting to slow down its production, and as a result we have seen a sudden spike in the crude prices. It was very high at $130 per barrel when the Russia-Ukraine war has started in February 2022, but it has come down to in the range of $75 a barrel in the recent past. But again it has started picking up, and now it is around $85 per barrel, and RBI expects it to average around $85 in 2024, and that could bring down the inflation. And one good news is that wholesale inflation is down now, and it is supporting the CPI inflation, and maybe going forward the inflation will come down. So what are the driving points as far as the decision to pause the interest rate? Three things very important. GDP is growing well, and the future optimism of GDP growth is well anchored, because the both manufacturing PMI and service sector PMI, they are on the rising spree, above 55%, 55. That is another good point that is supplementing the economic resilience. And inflation is on the diminishing track, and WPI is on diminishing track, and this time the monsoon is expected to be near normal, though the El Nino impact is going to be there. That is why many parts of India are facing the heat wave now, and maybe that this trend will continue for some time till the monsoon outbreak. So, taking a crux of the driving points, the US banking crisis and the stress in Europe on the banking system, that is Credit Suisse under stress, that has prompted RBI to look at the rising interest rates and its impact. And because the yield curve has become inverted now, the near term money is more costly than distant money. This has also been one of the key points that a pause will give some kind of a relief and a elbow room for the banks to look at its ALM mismatches and see how best they could protect it from widening further. So the banks will get some kind of a leg room to see that they are in a better position to work out their strategies to meet the requirements of mismatches, how they will be meeting them. And now that the call money rates have gone up very steeply from 3.32% in March 2022 to about 6.52% in March 2023. So this is a threat to the banking system, one has to see, and driven by the fact that the US banking crisis has led to many of the banks finding themselves under stress. Since the Indian banking system structural liquidity is different, our structural liquidity is very well spread, and we have a very high retail base, unlike your SVB bank, which had a very small customer base of high-tech companies and startups. But if we look at the commercial banks in India, we have very wide customer base, and very deposits are spread across, and that is why we don't have that kind of threats in near future. But then banks will have to take care to see that their ALCO management, asset liability management, and ALM mismatches and the risks emanating from them, they need to be managed more prudently going forward. So this time, the pause in the interest rates is a very interesting phase in the interest rate curve that India is having now, that is the upward curve. And if the inflation further comes down, if there is no threat to the growth of GDP, and the downside risks are not too much, then maybe that this will continue in future as well. Otherwise, maybe that a call will be taken in the next monetary policy review in the month of June, when RBI may take a calculated view at that point of time. In the meantime, the bank should take a cue from what has happened in the US banking crisis and what has been its collateral damage on the banking system elsewhere in the world, and take appropriate steps to use this window of pause of interest rates to set right its internal ALM mismatches, and see that they are in a position to put better risk governance in place, so that we remain on the growth track for the coming years. So let's see how it pans out in future. Please remember to subscribe to this YouTube channel if you haven't done so far, and let's learn together. And if you have any observations, please put it in the chat box so that we can learn together, and I will be trying to address those issues in the coming videos that we will be placing. So thank you very much for watching, and have a nice time.